So at Mercer, we advise about $16 trillion worth of asset owners, sovereign wealth funds, national social security funds, insurance companies, and we work with more than 7,000 active investment managers that bring us their best ideas on an ongoing basis. And what we're hearing from both sides is that the global economy is in a really good position right now, so good that the U.S. stock market, global stock markets hit a new all-time high just last Friday, and the global stock market's up nearly 30% over the trailing year. So a lot of risks economically have receded, even though, as you said, we have geopolitical tensions, continued war in Ukraine, continued conflict in the Middle East, and that is elevating implied volatility in the markets. But the underlying economic news and picture has been very good. And so in general, asset owners are focused on diversification and focused on being ready for the next crisis. So in terms of diversification, most investors are overweight recent past success. And if you look at the asset classes or the categories of investments that have performed the best, the U.S. stock market, the U.S. dollar, digital and AI technologies, in particular the Magnificent Seven, which are all U.S. headquartered companies, even though half of them are led by non-U.S. born CEOs. So those stocks, those markets, again, the Magnificent Seven, the U.S. stock market, the U.S. dollar, those have led other types of stocks, other stock markets, other currencies in the recent past. And that's great, but as investors look forward, they recognize the U.S. stock market is trading at a price-earnings ratio of 27 times. The Indian stock market is trading at 28, but the rest of the world is trading at about 12 to 15. China in particular is trading at 11. And so there's better valuation outside the U.S., and if the U.S. stock market, the U.S. currency, the Magnificent Seven experience a period of time where they don't lead global stock markets, then investors will have a smoother ride if they're diversified into other areas of investment. So the emerging and frontier market economies are getting a lot of attention. China, India, but looking past India to the rest of the world, as supply chains diversify in the real economy, that's creating investment opportunities for institutional investors in the non-aligned emerging frontier markets beyond China, which has had some issues in recent years, India, which has done really well but now trades at a high valuation. The rest of the emerging frontier markets is where many investors are finding good value.